Hello and welcome to another quote-unquote chart of the day from the Trader Guy. And as you can see in front of you, I have the Euro Yen weekly. And for now, I'd have you ignore this moving average. It's the 100 moving average. It's a little bit more important on the daily chart, but as I said, I have the weekly. And what I find interesting about this chart right now is that we have the 100 level, which, as you know, a lot of times the large round numbers will cause markets to move, markets to react, and such. So I always try to pay attention to them. And to kind of give you an idea, let me go ahead and change this around a little bit so that we've got some uniformity here. Let's see what 105 looks like. And of course, 110. And let's even put in 95 for good measure. Okay, so we have every 500 pips are laid out in this chart, and certainly we can see that these areas are areas that the markets tend to react to. Now, are they the be all end all of it? No, of course not. But there are obvious reasons why I pay attention to these. Okay, so recently we have seen a bounce from 95 and eventually a break of the 100 level. And what's interesting is we have so many hammers here that were previous support. This should be massive resistance. And in fact, on the daily chart, it did kind of turn out that way. Now that I'm back on the daily chart, you can see that I have the 100-day moving average that we have smashed through, and we've come back and we've pulled up against. And this, of course, is one of the averages. I mean, there are several out there, and there's a lot of little schemes and systems and stuff. But 100 is a pretty common one on the daily chart. 250, those are both pretty big ones too. So a lot of times when I look at a chart, I'll just see where they're at. It's not really a reason to make a decision in and of itself, but it is reason enough to maybe think of it as a tertiary um, kind of indicator. It, it's something that will matter to some people. It doesn't matter enough to me, but it's just yet another reason to think that perhaps a trade or a setup is coming in one way or the other. So you can see that this euro yen pair has broken above, and this, remember, this is 100 here, has broken above a pretty serious cluster here. We got a nice breakout, explosive breakout, and then we had a shooting star. We fell back to the 100 level. Now we're going to ask serious questions. The level, 100 being a nice round, I mean, it doesn't get more round than this number in the market, will attract a lot of people. We have a lot of different things going on at once, but what we essentially have, if you strip it down, so we have a breakout and a pullback to what was once resistance, and it should now be support. So having said all of that, we begin to look at the charts and we see if there's some other way that we can um, make some kind of sense of what's going on. So we could have drawn a Fibonacci from down there, and it doesn't really line up real well. That says 50%. It pulled back just above there. And I'm looking at it from a historical sense. Here we had the shooting star at the 61.8, so that makes sense. That could be one that mattered when we pulled back. But now that we've broken above serious resistance, we have to start looking at it from the other direction. And when I draw this Fibonacci level here, the 38.2 is right here at the 100. So now I have three reasons why 100 might matter. We've got the 100-day moving average. Granted, that's a weak one. 100 being the nice round number, of course, and then the 38.2. But as I zoom in, you can see that the candle for the day was a hammer as well. I don't know if it's the most beautiful hammer I've ever seen, but you can see that there's a cluster from the previous breakout. There was resistance there, I should say. So in theory, there should be support. As we fall back down and we form this very bullish hammer, this does suggest that perhaps if we can get above the highs for the day, we could go much higher. This cluster here will cause a reaction still, but we have sliced through it. So I would tend to believe, and typically this is the case, that a lot of this, especially maybe in the upper half, is kind of blown out. So it really shouldn't cause too many issues. So I think if we can get above that, it would be reasonable to suspect that perhaps we could kind of continue higher. So the next part of the question is where could this trade go? So I'll zoom out and you begin to look for areas. And the most obvious one, I think, is the most recent highs. Obviously, you will see it kind of go from there. Um, there's obviously going to be some resistance there. It would make sense that if we shot up, we would run into a little trouble, say at about 103, 104, probably the 104 handle or so, just a little bit under the 104 handle. But when you look at it from a bigger picture perspective on the weekly, you can see that 105 matters more. So I think 105 is a reasonable suggestion that we may get there. Um, and in fact, uh, it would even still save the downtrend that we have longer term. Assuming that we have some kind of channel thing going on here. I'm not overly concerned about it, but that just lines up a little well with 105, so it makes sense that we would run into serious resistance there. If we break over 105, then we could go much higher, obviously. And I think that would be enough to convince everybody at that point in time that we are going higher. But when you look at this chart, you can just see that it sections out quite nicely. And in fact, that's what I do when I set up my charts. I section them out. And the first thing I do is start drawing lines every 500 pips. It works on almost every pair. You'll have some strange ones like dollar Swiss or whatever that might have a section that's only 300 pips or whatever, and that's true with the bigger ones too from time to time. But it is a good place to start. So now I have support here at the 100. The question then becomes, is it possible that this fails? And of course, the answer is yes. Of course, it can fail. What does that mean? Now, typically, I will sell a break of a hammer because it shows a serious breach of support. But in this particular case, I see pretty supportive area right here at about 99. So I think we need to get under that as well. So that actually adds credence to the fact that there should be supportive action here as well. So this could be very interesting pair to watch. Now, while everybody else is watching euro dollar, the truth is the trade could be over here, and that's one of the biggest lessons. You need to look at the currency on the whole. Don't get stuck on euro dollar. There's nothing to stop you from making money in the euro yen in this particular case or some of the other ones. Real quick, you can see the euro pound looks like it's finding quite a bit of support now. Lots of hammers right here at the 97 or 79.50 area. In fact, we formed three in a row. That's pretty rare. Uh, but most of the world will be looking at this hammer here in the euro dollar. And I'm not saying that it can't work, but we have a lot of noise. This is a lot of noise above this. So while everybody else is sweating this move, it's very possible that the easier move may be over here against the yen because, after all, the Bank of Japan is working against the value of the yen. And if they were to intervene, this market would shoot straight up in sympathy with the U.S. yen pair. Anyway, some things to think about, and that was this. I hate to say today because it isn't always every day, but this chart of the day. It's looking at a breakout and a test of support, and again, just trying to find as many reasons to line up uh, to make your trading more successful. If you have any questions, feel free to email me at chris@thetraderguy.com.